If prices keep increasing the way they are, eventually our money wouldn't be worth the paper it's printed on. So the main way the government prevents that from happening is by, in recent real estate news, the Feds raised the interest rates by 0.75, which is one of the highest interest rate hikes that we've seen in years. That's right, if you thought mortgage rates were expensive now, it's only going to get worse. The government is doing so in an effort to stop this high inflation, and in case you haven't noticed, inflation is pretty bad lately. An example of this is how high gas prices are now. I even seen a recent TikTok video showing the cost of Arizona tea going up from 99 cents. Now, if they're increasing prices, you know it's getting bad. Let me give you a quick example of how rising interest rates will affect mortgage payments. So let's say, for instance, in January of this year, you were looking to buy a home for $300,000 with a down payment of 3.5% and with an interest rate of 3%. Your mortgage would have been around $1,800. Now, that same mortgage today with an interest rate of 6% would be over $2,400. Yep, that's right. The cost of buying that home today would be $800 more than if you would have bought that exact same home at the exact same price 6 months ago. So let's talk a little bit more about exactly what's going on, why the government is doing this, and how all of this is going to affect the housing market in the near future. Also, feel free to leave a comment below with any questions you might have and what you think is going to happen with the housing market. First, let's talk about what inflation even means, since this is something we've been hearing about all year. Inflation is when the purchasing power of your money decreases because the price of goods and pretty much everything else keeps increasing. If prices keep going up at this rate, the average consumer isn't going to be able to afford the basic necessities. Now, why is inflation so high in the first place? Back when the pandemic hit, everybody was afraid that the world economy would just slow down to a crawl and cause the markets everywhere to crash because people wouldn't be outside spending as much money. I mean, you remember how we had to quarantine and stay inside. The government didn't want that to happen, so to encourage spending, the government lowered the interest rates, which made borrowing money cheaper. They were trying to entice everyone to basically keep spending money to keep the economy going. Well, it looks like their plan worked because everybody jumped at those low interest rates and proceeded to buy up as much as they could. Flash forward to today, where the buyer demand is still high to the point where the supply of goods is low. Whenever the supply is low and buyer demand is high, prices are going to increase. That's the law of supply and demand. People who are active in the housing market has most likely experienced the effects of this. If you as a buyer try to bid on a home only to be beaten out by multiple offers on the property and the property end up selling above asking price, this is the law of supply and demand. The supply of homes is low to the point where you have 10, 20 buyers bidding on one home and driving up the price. If prices keep increasing the way they are, eventually our money wouldn't be worth the paper it's printed on. So the main way the government prevents that from happening is by increasing the interest rates or making it more expensive to borrow money. They're doing this to hopefully slow down the market and slow down consumer spending, which will eventually slow down buyer demand and slow down prices and get them to fall back to normal levels. Now that you know what inflation is and why the government is raising interest rates to fight inflation, what does all this mean for the housing market? When the government announced that they raised the interest rates, they said that they were looking to reset the housing market. They know that the housing inventory is very low right now and that prices are just skyrocketing and that first-time home buyers are going to be challenged with buying a home because they most likely won't have enough money saved up. Well, just like with everything else, the government is hoping that with these increased interest rates, mortgage rates will also increase, which will make mortgages more expensive and harder to buy. That will then cool off buyer demand, which will also cool off these home prices. If you pay attention to what they said when they announced the interest rate hike, the government really doesn't know how this is going to affect the housing market. So like everyone else, we're just watching to see how this is going to affect us in the future. Now, if you're wondering if you should even consider buying real estate now or maybe waiting until 2023 to see what happens, I've already made a video covering this question. So if you're curious, check it out.